To hop on today and go through an update on the ES futures contract, which is the S&P 500. I know it's been a while since I posted on here. Things have been a little hectic with kids being on summer break and everything. But I do want to get back to posting these videos. I've still been on the charts every day, trading, marking up setups, watching ICT's content. So I haven't taken a break from trading. It's just been hard to record videos and get them posted, but I'm going to try to make more of an effort to get back to that. So with that, let's go ahead and jump in. So the charts you can see on my screen are all the ES futures contract for September 2022. I have 6 time frames displayed. The upper left is the daily, the upper middle is the 4-hour, the upper right is the 1-hour, bottom left is 15, bottom center is 5, bottom right is 1. I feel like this gives me a really good kind of overview of all the price action and allows me to keep the higher time frames in mind when I'm looking to enter on the 5 or 1 minute time frames. So basically where we're at with S&P 500 is on the daily here. If you look in the upper left, you see we were very bullish last week. We broke above, we had a market structure shift here, and then we broke above this gap in the weekly open from early June. This was on June 13th open. We had this gap here. So you see price was very bullish last week, ran above that, above the 50% mark, which means that we ran into a premium, and that's where we would be looking for sells, is above this 50%. I had this fair value gap marked up here, thinking that price might go up into that, but obviously we only made it, just above the premium. To start this week, we kind of pushed ahead and then dropped back down below this gap again, which has now kind of served as, this would kind of serve as like a resistance level. Now, I think if it were to come back up into that area, I would be expecting price to reject off of that potentially. So this week we've been very bearish, obviously. So if we move over to the 4-hour, you can see I have a fib retracement here, which is basically on the daily this whole move up and the retracement back into that range. So on the daily, overall we're bullish, but we have had a market structure shift to the upside. So short term, meaning like in the next week or so of price action, I was expecting this retracement. Once we drop back below this gap, I was expecting the retracement down at least to this 37.93.50 level, because in order to buy, we would need to go into a discount. So we have done that now, and then I had this green area marked, which is the OTE zone for the fib retracement, which is essentially the 60 to 79% fib retracement levels. This is usually a sensitive kind of area of interest. I also have this 4-hour fair value gap here, and then we have the previous week's low over here. And then obviously we have some relative equal lows over here. So there is a potential that price could sell off through this and come down to sweep this, and it could even just keep going if price wants to go bearish from here. But I at least had this area of interest as far as taking profit on some sells. I had yesterday, I should have made a video for this, but I did actually put in a sell up here, and I got wicked out on this wick right here. You can see it better on the 1 hour. I was in like right here, and came up, tagged me in, came down, wicked me out, and then I missed all of this price action. But that's okay. Would have been a 25 plus R trade. But I take it as a win that I saw the logic playing out. I saw we went up into, above the highs, we dropped back below, had a market structure shift right here, came back up into that, and so, just happened to get wicked out. But we've sold off down into this area down here now, where I'm expecting price to slow down, which you can see based on the 4 hour, basically today, from market open, we sold off down into it, and then now, we're starting to get some bullish candles coming in down here, since market open. Like we kind of, went up at the 9:30, and then now we're down below all of this, all these lows here. We've kind of dropped below that. So we dropped below it, and now into this 4 hour fair value gap, and now we're kind of, price is rallying back up. So I'm basically watching, now that we're down in this area, I'm watching to see how price reacts to it. I'm looking for a market structure shift on the 15-minute, probably at least the 15-minute. So I'd be looking for essentially like these highs here to be taken out. So price would need to come up here and then retrace back down, and could potentially look for a buy, or once it's above this level, it might not retrace all the way back down, but I would be confident to start looking for intraday buys there, with the intention of, if we got a buy in this area, I would be looking to run it back up to this fair value gap, like from 2 weeks ago up here. Because, obviously indices, if we look at the daily, I mean, we've been insanely bearish. So, there's, yes, we've had this market structure shift, but we had the same thing back here in May, dropped below a low, ran the high, and, people could have thought like, oh, we're going to go bullish right in here, and then it just plowed through it. So just because we had a market structure shift right here does not mean we're going bullish, on the daily at least. Right now it just means that we are clear for the market to seek some form of sell side liquidity, because we've taken the buy side here. So now it should seek sell side, and it might not come all the way down to here on the daily. If it wants to go bullish, like I said, it could take out this, it could take out this, it could come down and sweep this out, or like I said, it could just, sell off through the floor, and just keep going. And our job isn't to anticipate or predict where the price is going. Our job is to watch the delivery of price at key times of the day and look for ways we can get in with the flow and capitalize on it. And that's what I'm trying to do. Is I'm not trying to force my predictions on the market. Just kind of take it as it comes, watch for it to take liquidity, and then look for the opposing liquidity that it would be looking for from that area. So right now, I did catch a sell this morning. If we look down here at the 5 minute, essentially what I saw this morning is we've been bearish, obviously, so we came up, we took this high here, was swept right here during London, and then we sold off through here. So we took buy side, we took sell side. Now I'd be looking for the retracement back up into that zone. So if we go, and then if we look at the 1 minute, you can see here there was a fair value gap here. So we scroll back over right at the 8:30 open, price randomly ran up at 8:30 right into that fair value gap, stopped, hit it again, stopped, hit it again, and then sold off. And then at 9:30, or running into 9:30, we got one more push up, and it just about went up to my stop loss, but thankfully it stayed in. And then immediately spent the next 10 minutes selling off. Hit my TP objective, and as you can see, went much deeper. I basically stopped at the top of this OTE zone just because we were in a premium already, or a discount, sorry, already. So I was selling in a discount on the 4-hour. So, I was being aware of the fact that the market could stop at any point in this area and it be legitimate, because we are in a discount on the 4-hour. But I was able to mark up and snag this 8+R trade. And the way I've been doing trades lately is I would have taken 90% off at 5-1, and then let the remaining go. And honestly, with as how quick as that went, I might have left the TP open at the bottom to kind of see until we got like a market structure shift. So on the 1 minute, so once it broke here, I could have taken profit here or something like that. But yeah, so caught a sell this morning, which is good. Logic played out, especially after missing the big trade earlier in the week. So now I'm kind of sitting, it's getting close to the end of the morning session, so probably not looking for too much else to happen right now. And it is Thursday, so we're getting close to end of a week, heading into a holiday weekend, Monday being July 4th, so there won't be any, volume and volatility in the market on Monday with it being closed. So not expecting a lot of fireworks for the afternoon session. So, but I'm basically just watching, what it does in this OTE zone, in this fair value gap, in this order block here, this bullish order block, because, we had this last down close candle before a bullish rally above an old high. So to me, I believe this candle right here is a bullish order block. Still not super clear on the exact criteria for order blocks, and I don't really use them all that much. I primarily focus on the fair value gap. But so I think there's a case to be made to watch for support in this range. Again, I'm not expecting that. Obviously the price has been bearish, and I have no reason to think it's not bearish right now. Just kind of getting in the flow, taking the market as it comes, and just trying to do that. So I hope this video was helpful, insightful. Like I said, I'm going to get back to trying to record every day for the morning sessions, at least. And when I can, be able to hop on and record without any disruptions and stuff, I will try to get videos posted to keep growing this channel. I'm also creating a Telegram channel that I'm going to put in the description for this video and put in the bio for the channel, as well as my Twitter and stuff like that will be linked up in there. Although pretty much everything I'll be posting that's not on this YouTube channel would be in the Telegram, because I don't want to pollute my Twitter feed with a bunch of trading stuff necessarily, because that's just not what I've used it for so far. But Telegram, I'm going to try to centralize everything in there, as I keep trying to grow this community and share my journey, and connect with other ICT mentorship students and stuff like that, because that's the whole point of me doing this, is for my own self-reflection, my own reference, and to connect with other ICT traders and grow with them, and kind of have this shared hive knowledge and experience of us all kind of looking for the same things and tapping into the flow of the market. Um, so yeah, and then last thing I want to mention, if you haven't read yet, um, Trading in the Zone by Mark Douglas is a excellent book. I would recommend everyone go read, because trading is mostly it's the psychology aspect of it is, you got to have your mind right, you got to be disciplined, stick to your rules, all that kind of stuff, and you will see your trading level up. So if you haven't read that book, highly recommend it. You can do some searching. There's plenty of free PDFs all over the internet. Um, Audible has it if you want to listen to the audiobook. I have both the audiobook for long drives and a hardcover that I'm going to reread again. So yeah, highly recommend that book. So until next time, good luck and happy trading. Thanks.